Welcome back. President-elect Donald Trump preparing to take office while investors are gearing up for new policies from this administration. One big change that could be in store early on is the government's role in Fannie Mae and Freddie Mac, as shareholders hope to privatize the government-sponsored enterprises.
One of the things we didn't do, and partially because we had these regulations, there's so many people involved in mortgage regulation, we never finished them all. And you know who got hurt because of that? The American public.
We got to get Fannie and Freddie out of government ownership. It makes no sense that these are owned by the government and have been controlled by the government for as long as they have. In many cases, this displaces private lending in the mortgage markets.
Joining us right now to talk about that is former Fannie Mae executive and Collingwood Group chairman Tim Rood. Good to see you, Tim. Thanks so much for joining us.
Maria.
Has this hurt lending and the American public, as Jamie Dimon just said, in terms of government ownership of Fannie Mae and Freddie Mac?
Well, I'd say that it's hurt the investors of Fannie Mae and Freddie Mac. I mean, if you think about the concept of a company being nationalized, 80% of a company being nationalized, and the government sweeping 100% of the profits. To the average homeowner, to the average lender, I don't think that they see this as really a problem. I mean, a lot of the conversation around reforming Fannie Mae and Freddie Mac looks to be a solution or solutions looking for a problem because credit's available, credit's cheap. Certainly lenders don't have any issues with Fannie Mae and Freddie Mac.
50% or more of mortgages today are not issued by banks, right?
Well, banks are terrified about being in the mortgage business. I mean, they think that they've learned their lesson over the years leading up to this, where they thought they were using government programs responsibly, and it turns out that when they thought that they were actually selling the credit risk to the government, they were actually renting it, because as soon as the borrower started to default, they got sued for hundreds of billions of dollars. So that's a cautionary tale, not necessarily for taxpayers, but ultimately for banks.
Well, the problem is for taxpayers, isn't it? Because they're standing behind these monsters, and what you really want is to liquidate them so that taxpayers aren't exposed again like before the crisis. I mean, this investor whining about the profits, all of these profits are generated by taxpayers.
Yeah, but I mean, the similar argument can be made. I mean, it's kind of like if you push somebody off of a train platform and then grab them and say, I just saved your life. I mean, is that the same thing? Now you owe me the rest of your money for the rest of your life? I mean, why doesn't every Chrysler or GM have a government seal on it?
No,
I mean,
we don't all have to buy
argument.
that person's train ticket.
Yeah.
These are not independent enterprises. They're playing with our money.
Yeah, they've always been playing with the government money. I mean, there's been an implicit government backstop, but they were privately owned companies, and that's the inconvenient truth, is that these were public companies with a public
That's the scam that went on so long before 2008. And why would we want to return to that?
I don't think you really do want to go back to it. I think when people talk about recapitalizing and releasing these companies, no one's talking about going back to the old model. I mean, it was flawed.
Who would believe you're not going to bail them out again, right? You've got to sell them off, let private markets do what they do all over the world, sell mortgages. CBO says you're talking about 20 to 60 basis point increase in rates.
Yeah, I mean, so the government, what we've learned in this most recent economy, and certainly in the defaults or in the housing crisis and the federal financial crisis, is the government doesn't have a real appetite for defaulting. We're perfectly comfortable inflating and bailing people out, but we're not real comfortable with letting individuals or businesses fail. So, I mean, that's not a Fannie Mae or Freddie Mac conversation. That's more of a government.
Yeah, but with government still owning these companies, it is. I mean, then they're never going to have allow these companies to fail.
Well, the government, because it was backstopping all this Fannie Mae and Freddie Mac debt, it was the implied obligation that they would bail out Fannie Mae and Freddie Mac. That's the problem with the way that they still exist, which is your point.
Yeah, and it's going to happen again if you privatize them. But everybody is going to assume they're going to be there, as you said, because they can't resist bailing them out. So shut them down.
So how would privatization of Fannie Mae and Freddie Mac affect the lending environment? Let's talk about that. Let's say they were successful in privatizing these companies. Interest rates are rising. We know that that's going to continue. What's your take on that?
Well, I mean, privatization could take many different forms. I think what's being proposed right now is that the Fannie Mae and Freddie Mac would be privatizing some concept of a mutual insurance company. So you have investors, lenders buying into these companies so that there would be some skin in the game, some shared risk, and ultimately private capital will be way in front of the government guarantees. I don't think anyone's contemplating any further that there wouldn't be ultimately a government backstop behind these companies because of, one, you want to ensure the liquidity of the mortgage market in good markets and bad. the 30-year fix is in jeopardy, is the argument, and ultimately you're looking to subsidize mortgage rates, not necessarily for those of us around the table who can afford it and don't really need it, but ultimately for the low to moderate income and harder to serve borrowers, so they're not served with a subsidy.
What do you think about that,
This
Shane?
is the idea that gave us the financial crisis, is that government has to stand behind this market, even though it functions without a government guarantee in lots of places, including in the U.S., with non-conforming loans.
And part of and part of the myth is that the politicians believe that the American dream is owning a home, when it benefits a lot of people to rent homes. But again, it's the mythology that's perpetuated by politicians.
And even if you want to own, what you do when you take out the subsidies is they become more affordable. That's really the scam here, isn't it? Is that this is all done in the name of affordability, but all this government backing raises the prices.
Well, I mean, the easiest thing is to stay off drugs, right? Rather than get off drugs. I mean, there's no policy equivalent. There's no methadone to a policy equivalent for getting Fannie Mae, Freddie Mac, or the government out of housing, whether it be for, you know, your tax write-offs or whether it be the subsidized interest rates.
So we just have to accept that we'll have a financial crisis like '08 once in a while.
I don't know that you have to accept that. I don't think it's that binary. But ultimately, what are you trying to achieve? What's lost by bringing the government out of housing? And there's been no politician who's ever been elected because of their supremely intelligent housing policy. Ultimately, what you want to ensure is that you first do no harm, because the housing market ultimately is 20% of the GDP. So that's the big fear for politicians.
Well, taxpayers are 100% of GDP.
Yeah, there you go. That's true. All right, we'll leave it there.
Wealth. Yeah.
Rood, good to see you. Thank you so much for your insights. Appreciate it. Great conversation, guys.